Hey everyone, welcome in to another daily editorial here on the KE Report, getting an update from Vizsla Silver. We're going to be talking more big picture about the company's strategy moving forward, the Panuco Project with some recent drill results, as well as really just explaining how the company's going to go about future catalysts here, advancing this major Copala area, testing some other areas after the company also just raised a big bought deal financing back in September of $65 million. Chatting right now with Mike Konnert, President and CEO of Vizsla, traded on the TSX Venture Exchange under the symbol VZLA, and on the NYSE also under that symbol VZLA. Now, Mike, look, there's been a lot of action in the silver space in Mexico. Silvercrest, Gatos, both being taken out. Those were production stage assets. And now there just aren't that many silver-focused production assets in Mexico. And then you go down into these more advanced resource-heavy companies like Vizsla that has a large resource that is of high grade. So I want to start off with more the corporate strategy here of how the company is positioning itself to continue to de-risk the resources that you have, but also look across the project to some other exploration. Mike, just talk to us about how you are positioning Vizsla Silver right now in this much better silver market environment, please.
Yeah, definitely. The way that we are positioning the company is the same that we have positioned it before. We have a hardcore focus on creating not Mexico, not Latin America, but the world's next major kind of high cash flow, meaningful silver project and silver company here. So Silvercrest and Gatos both were taken over, by silver companies for cash flow. And cash flow is a very difficult thing to have in any kind of meaningful quantity in the silver space. And it's something that we would have, a substantial multiple from Silvercrest and Gatos once we're in production. And we're targeting 2027 for that production beginning. So Vizsla Silver is a project that is different than Gatos and different than Silvercrest in the context that this is a true district that we've consolidated for the very first time. It's got excellent infrastructure. And, our PEA that we outlined several months ago, shows probably the silver industry's most meaningful new cash flow coming online in many years. So, if you take the multiples that the Gatos and Silvercrest received for their takeovers, and you look at our first few years of cash flow, which are, well and above $250 million US, you start to really get a picture of what just the tiny western portion of our property that encompasses the PEA and an area of influence around that, which is like 10% of the veins that we know about in the district. You get a sense of what that's really worth. And then if you think about what, the huge, massive blue sky upside of our district is worth, you can see that Vizsla, in my opinion at least, is worth, many times what it is right now.
Well, Mike, just to that point, when you look at the PEA, yes, the numbers are very robust. They jump off the page compared to a lot of economic studies we've seen. But it's also important to note that you didn't include all of the ounces that you've discovered so far in that PEA. You're still exploring, you're still discovering, but you also have that huge land package you alluded to where there's other areas, like you're mostly in the west, but there's still the central and the east. So I guess give us the bigger picture vision of how you could continue to build that value to close the gap on really where you should be rated as a company.
Yeah, absolutely. And so, the re-rate will come from two different separate pathways for Vizsla that are running parallel. And the first is de-risking and driving the PEA area, primarily the Copala vein into production. And that's our focus, going in from PEA, which we put out several months ago, going into the feasibility study, which will be sometime second half of next year. In that period of time, we'll have released an updated resource that has, an improvement on the indicated ounces, and those ounces will be the ones going into the reserve that go into the feasibility study. We're also focused on permitting, so that's going to be very important for us. That's a major de-risking once we have the overall project permitted for construction and production. Right now, as a side note, we do have, very successful in permitting drill pads, but also permitting our test mine, which will start later this year. So these are all very important things that we're doing that are included under that de-risking and developing banner, let's say, focus on 10% of the veins in the western portion of our property, a very small portion of our overall land package in this area of Mexico. But outside of that, we have at least to start, we have a 10,000 meter drill program. We're used to drilling 100,000 meters, 120,000 meters a year. So 10,000 meters is a bit smaller, but that's what we're doing to start. And that's going to be focused on finding new centers of mass, new areas that we can develop elsewhere in the district, like San Dimas, Camellia. We're likely going to be in a position that we can mobilize and start to drill very soon elsewhere in this district. And what I envision is already the western portion of our property, the PEA, it's twice the ounce output of Silvercrest. It's a top 5 global silver equivalent producer. If it were to be in production today, it'd be a top 5 mine, just on, like I said, that 10%, that very small portion of our project. But I envision going forward that we'll be able to use that cash flow from that project number 1 to not only find multiple other projects, but also to potentially build new production centers throughout this district. And it could be a district that's producing from multiple centers of mass, and really I think has the potential to be one of the world's great silver producers.
Okay, so you're moving forward both these paths, the de-risking path around Copala, as well as some of this new true exploration with this ongoing program. But look, first things first, right? Get into production, start cash flowing. That all ties into the de-risking aspect and recent drill results that we've seen all in and around Copala. You had some results out on October 1st that were very high grade over some long widths, and it seems like you were further expanding some of the mineralization closer to surface. So as of now, Copala-wise, that already carries a lot of the resource, how locked in will that updated resource be to further upgrading the ounces, building the ounces, but even more importantly, having ounces that you can put into the feasibility studies?
So our goal is to increase the number of indicated ounces, and the way that you can do that is, primarily through converting inferred ounces by doing closer space drillings, in most cases about 25 meters space drill holes. But another way that we're actually increasing the amount of indicated that will effectively go into a mine plan as we update the mine plan for these new resources is that we had success drilling outside of the existing resource area, the existing block model. And fortunately for us, those results were exceptionally high grade. And they also brought, if you can imagine, a block model of the resources, subsurface around 100 meters subsurface, it brought that closer to surface, maybe by 40 to 50 meters. So, we're starting to see material resources moving up closer to surface from underground due to the successful drilling, but also the confidence of these ounces, i.e., not inferred, they're indicated, and also the grade is better than the previous exploration resources and the results that we had before. So, these holes have been spectacular, and they've been adding a lot of value through those 3 things, through expanding the resources outside of the known areas before, through converting to higher confidence, and also improving the grade.
Well, Mike, let's dig in on that even a little bit further, because a lot of times when companies go from a PEA to a PFS or an FS, you end up losing ounces. You end up seeing sometimes the grade and the cutoff grades, change, and you see some areas, labeled as waste. In this case, you're upgrading areas that didn't have mineralization. You're getting a higher grade profile. What does that mean for the upcoming resource, and can more ounces be included in the economic studies to come?
Yeah, and I think, it's a really interesting thing you said there. And for us, our goal has been not to go backwards from PEA to feasibility. So what that means is, a lot of times companies will put out call it a dream sheet. We have I'll give you an example here. We have 325 million ounces of silver equivalent in our resource. We only used 168 million of those ounces in the PEA mine plan. And that's because we wanted to prioritize, areas that we thought could be put into the mine plan early, but also prioritize high value ounces over just, big production numbers that maybe doesn't make us enough money. But, most companies, what they'll do is they'll put every inferred ounce that they have. They'll have a really, kind of loose mine plan that, is really a dream sheet. And they'll maximize the NPV, and then they'll try to trade at a NAV of that. And then they try to get a premium and sell the company to another company. But, our focus really is here to prioritize return on investment. And you can see that in the calculation of NPV to CapEx ratio that we have, which is a 5.1 times. It's industry leading. It's superior to Silvercrest. It's superior to any other silver company in this business right now at 5.1 times. It's incredible. And it's all driven by, our focus on return on investment. So instead of using 325 million ounces and having kind of a loose or fluffy PEA, we were focused on a more developed PEA that included mineable ounces and ounces that we could, we understood would be, focused on higher grade, more ROI, lower cost ounces closer to surface. So, this infill drilling that we're doing, that's growing the resource closer to surface, but also, bringing the grade up, and also, higher confidence indicated ounces or better, that's actually growing that mineable area and adding ounces that could potentially go into an updated mine plan. And that mine plan would be part of a feasibility study. So that relates back to the idea of not going backwards. It relates back to the idea that it's possible that things will, if not improve, stay relatively the same going from PEA to feasibility. And that's something that, few companies do, but it's something that is attractive when we look at things like project finance, when we look at things like, the startup of a mine, the startup of a test mine to further de-risk these things. It's effectively what a company would do if they want to drive this into production and create a lot of value for shareholders, which is exactly our focus.
So, Mike, the big story here being the roadmap to mining, as you said, in 2027. Give us that roadmap then. What are the key catalysts? I know that's over a couple of years, but we're already in Q4 of 2024. So what is that roadmap of this mining aspect for the company?
Well, and, important thing to highlight, you mentioned, so we raised $75 million in our bought deal here. That brings our cash to well north of $100 million Canadian. And, that's an excellent place to be. The biggest risk that I experience or I see in the junior mining space, is to be undercapitalized and not be able to stick to timelines. And that's a scary place to be. So, thank goodness that we've been able to raise this money based on the merits of our project and our plan. And I'm excited to have this funding here to really drive the project forward aggressively into that 2027 timeline. And, certainly a part of the equity portion of the CapEx would be covered by the cash that we have on hand. But in between now and say, the ability to start construction, we have a few things. Obviously we're working towards feasibility study. The feasibility study is a very important document that allows the board basically to sign off on, final investment decision, final construction decision. It also allows project finance, so debt providers, to understand the project and be comfortable with that as well. So the feasibility study, project finance is important. The permits, the final permits to basically build the project and change the land from disturbed land in Mexico to a mining operation. That's important as well. That's all happening, I would say, in the first half of next year. I'm not saying that permits will certainly be granted by that point in time, but certainly we'll be working on those things. But in addition to that, before now and the end of the year of 2024, we'll have started the test mine. We'll have updated the resource. We're planning on putting an updated resource out by the end of the year. And we'll be doing some more mine optimization and things like this. So we're very active already. The cash on hand allows us to be, very aggressive with the work that we're doing. And I wager to think that, I suspect that there's probably very few other companies, certainly not in the silver space, but very few companies in the precious metal space that are driving forward towards a profitable operation like we've outlined in the PEA, like we are here at Vizsla Silver. If you look at those numbers again, 86% IRR, $224 million CapEx. At these metal prices, it's likely a 6-month payback. I don't know the payback at today's gold price, but it's certainly less than the 9-month payback that we outlined in the PEA. So we're in an incredible position, and that's what I'm talking about there is kind of part of that first plan of de-risking and developing. But of course, there is the chance that we go and make a brand new discovery that could be as good or even better to Copala. So, we're active, and we're doing a number of things that really can create a lot of value for shareholders.
Well, Mike, I want to dig in on that last point you make, that if you made a new discovery that could be Copala 2.0 or something just as substantial, when you think about how big your land package is, and as you say, you've only really focused in on 10% of it, in an environment where other companies are hungry for big silver assets and we're seeing M&A, in the event that Vizsla was taken over, I think a lot of shareholders, me included, would be sad to see the central and the east area never get explored. Would it be something where you could spin that out because it's so big you could actually have another company over there? Or what could you do to insulate current investors against the potential of a takeover before you really have a chance to find out what's on this land package?
Well, it's a great point, and something that we think about a lot, of course. We're not in a position where we're willing to sell the company. The best thing for shareholders will be for us to drive this into production and get, a much better PNAV multiple than we would currently get. So that's not something that we're entertaining. But because we understand the dynamics of the public mining markets, what we did was we spun out Vizsla Royalty as a 2% royalty on, the rest of the district that we haven't drilled and discovered. But the best thing that we can do, of course, is make those discoveries and have an inventory of meaningful projects and discoveries in the other portion of our original Panuco district map. But when I refer to the 10% of the project, I'm referring to 10% of the original project, which is about 7,500 hectares. We also added 10,000 hectares to the south in San Enrique, and there's never been a drill bit on that property. And then we added another 10,000 hectares to the north through La Garra, and there's never been a drill bit anywhere on that property either. So, we do have optionality. One of the things that we love the most in our company here is to have optionality, to not be forced down, one specific direction. So if, God forbid there was a takeover, at a price, I don't think that companies can pay, what we certainly deserve as shareholders. But, if that were to happen, we have the La Garra project, the San Enrique project, and of course the center and the eastern portion of the Panuco district to look at the potential of spinning out.
So where's the priority? If you are switching focus a little bit with the drill bit to more of this exploration focus, where do you go first? What is the priority area?
Well, the priority area that we're looking at are some interesting targets in the southeast. So, I think on our presentation, we highlight 5 different centers of mass. We're pretty interested in a portion that's, in the southeast corner of the map called Camellia San Dimas. And that'll likely be the first place of exploration. But, we have probably sometimes we talk about 150 targets. Those targets are always being ranked and prioritized. And, we find new targets that are really quite interesting. So there's really no shortage of targets here. But, one area that's standing out to us right now is in the southeast.
Well, and if you were going to pick one other target other than that, there's so many other ones. Just pick one more for us, Mike. What's number 2?
There's a couple of things that I like. One is the Animus vein. We always thought that Animus had a dog leg basically to the east, and, it would kind of hit down close to where El Coco is and then dog leg to the east instead of running kind of northwest like it does to the northern or it does on the northern portion of that corridor. Now, our geologists have come up with a theory that actually that dog leg isn't part of Animus, but it's actually a splay, and that Animus continues further southeast, trending southeast, I guess, it's in the second half of this vein to the south. So, there could very well be some really interesting targets there. We're starting to understand the structure a little bit better. There's the potential for us to make new discoveries along there. And of course, if it's a southern extent of Animus that no one knew about before, Animus is responsible for well over 100 million ounces of silver equivalent production historically. This could be a very interesting target for us as well. But there's other things too. We're talking about the center and the eastern portion of the district. There's Jesucita, there's Santa Maria, there's Santa Lucia. I mean, there's so many different targets and veins and things like that out to the east. But, even just between Napoleon and Copala, where we're going to start the test mine, you start driving underground, it's very possible that we may find some very interesting structures on our way to the Copala main structure, as part of this de-risking exercise. We're fortunate to have Eduardo Luna on our board, and Eduardo is probably the most familiar person with San Dimas, in the world, I would think. He was involved with Luzman as the mine manager and executive in charge of San Dimas, and then was involved in selling that to Gold Corp, where he sat on the board of Gold Corp for a number of years, and then sat on the board of Wheaton Precious Metals, of course, which was started from the stream from San Dimas. So he has seen the iterations of that San Dimas mine, and has commented to us that getting underground and drifting from one place to another is where you make a number of these major discoveries that are just kind of out of sight of drilling right now. You'd have to just start taking kind of a fence drilling approach, or even kind of wildcatting. Probably wouldn't have the most amount of success, but the easier way to do that is just to drive across through underground mine, and that's going to be very exciting to see what occurs once we're underground. And that's again within that tiny postage stamp area of the PEA that would be a top 5 silver producer already today. So the scale of what we're talking about here is truly one of these multi-generational silver districts, similar to a Fresnillo, certainly similar to a San Dimas. And the best part is that Vizsla Silver owns it 100%.
So then, Mike, before I get you out of here, look, I want to know, and investors always want to know, what are the near-term catalysts? We've talked big picture. You've also discussed what you're doing with the drill bit right now, but outline the news flow for us as we go to the end of the year and into next year, please.
Yeah, certainly. I think that there's still more to come from infill results. I think that already shown that's a very positive tenor of quality of drill results. So there will be some more news from there. Certainly the updated resource before the end of the year, test mine beginning before the end of the year. And, of course, we always like to update on exploration. So, once we're underway there, I think shareholders can expect, regular updates on exploration. I would think those are the most important things as we head into Q4 here.
All right, Mike, thank you very much for this update. Again, Mike Konnert, President and CEO of Vizsla Silver. Click that link in the show notes to learn more about the company and read over the recent news. Send us any questions you have, and we'll get Mike to address those on future interviews. Mike, thank you very much for taking the time and outlining the vision for the company moving from here.
Thanks, Corey. Thanks, Chad. Appreciate it.